The housing market has begun to improve for home buyers as mortgage rates drop and homes are less competitive out there in the market. But things don't feel great if you're a home buyer out there. Home prices are still high, although they've softened a little bit and the housing market is more balanced than it was the past few years. Mortgage rates have come down, but they're still much higher than they were in 2020, 2021, and 2022. Now, the thing is, it doesn't feel good in the housing market right now, but this might be as good as it gets, or at least you're trading one problem for another, right? So right now there's less competition in the housing market. Things may feel a little expensive if you're a home buyer out there, but you're not competing against multiple people in most scenarios. Now, there are some homes that receive multiple offers, but many properties are sitting on the market for longer, are only receiving one offer, and many of them are selling for under list price or reducing their list price. Now, if mortgage rates drop and things become cheaper for home buyers out there, you're going to have more competition in the housing market. There's going to be more buyers who can afford to purchase properties. And now the weight of a heavy mortgage payment or the weight of how expensive the housing market is replaced with the weight of how competitive the housing market is, because there's a lot of buyers waiting on the sidelines right now. Home buyer demand is the lowest we've seen since 1995. So the past 30 years or so, which is significant, right? There aren't many buyers out there. So as mortgage rates drop, we will see more of these buyers jump back into the housing market, meaning that yes, things may improve for you as a home buyer, but you're really trading one poor section of the market for another. So let's get into this video. We're going to talk about what might happen as we move into 2025 and the best strategies for you as a home buyer out there. Now, I personally think the best thing that you can do is stay on top of the news and stay on top of mortgage rates. Many home buyers out there waited to start looking or waited to lock in their mortgage rate until after the Federal Reserve cut their Fed funds rate. But we'll see in this video here that mortgage rates have actually increased since the Federal Reserve cut their Fed funds rate by 50 basis points. So mortgages, they trade ahead of what the Federal Reserve is going to do. So staying on top of it, watching the news cycles, being prepared for potential moves in mortgage rates before the Federal Reserve acts will give you an advantage over the home buyers out there that are waiting for the Federal Reserve to cut their rates before making their move. So we're going to get into it in this video. Before I do, my name is Liam O'Reilly. I'm a realtor in Vermont with Jerry Riley Real Estate. If you have any real estate needs, whether in Vermont or anywhere across the country, reach out to me directly and I would be happy to help you. So starting off with this article here, this is out of CNBC, and this is an article from an economist out of Zillow. And what the economist says is it's not a great housing market this fall, but it may be as good as it gets. We see here lower mortgage rates make monthly mortgage payments more affordable, in some places cheaper than rent, per Zillow analyst. So what she talks about here is that the housing market is exactly what I mentioned at the beginning of this video, right? The housing market has improved. Mortgage rates have come down a little bit. It's less of a seller's market than we've seen in days past, but it's not comfortable if you're a home buyer out there. It's still expensive when you, in many places, I know here in Vermont, when you look at what you're paying in rent compared to what you'd be paying for a mortgage payment, the mortgage payment oftentimes is still higher than the rent payment, right? It's not cheap to purchase property, especially putting less than 20% down, which many new home buyers are. Now, what she says here at the end of this article is the most important thing to keep in mind as you're continuing your home search. Wait and you're trading one difficulty for another, says Fairweather. If mortgage rates fall further, if mortgage rates further decline next year, the number of homes for sale might grow. Most homeowners are sitting on their loans, right? We talk about this with the lock-in effect, where many homeowners right now are waiting to move. They're not moving because they don't want to give up that low monthly payment. That's why we're seeing foreclosures are so low. Inflation has raged across the economy. The price of everything has gone up, or at least that's the way it feels. But the homeowners who have locked in a low mortgage rate at a cheaper home price, their mortgage rate hasn't changed at all. Their housing payment hasn't changed, so they're not putting their homes on the market. However, she says at the bottom here, we'll probably see more people who are buying or selling to buy again, Fairweather says, because of high borrowing costs. So in other words, you'll have more competition. You're trading one difficulty for another. Yes, there might be more homes in the market. Yes, mortgage rates might be lower, but there will likely be more home buyers at that time as well. Anyone who bought a property in 2021 or 2022 knows that, yes, things were much more affordable, right? The prices were cheaper. The mortgage rates were lower. The properties that were listed for sale were much more affordable than they are today. However, the competition was fierce. There were 5 to 10 offers on most properties out there. Now that's not the case. Now sellers, if there's multiple offers, they're lucky to get 4. And that's a lot in this day and age. Now, yes, there are still properties that are receiving multiple offers, but many properties out there are selling for list price or below because there's so few competition out there. So when we take a look at this with mortgage demand, now this is what I wanted to talk about in terms of you as a home buyer staying on top of the news cycle and being ahead of the other buyers out there who are just waiting for the Federal Reserve to act. You see here, mortgage demand soars as Fed interest rate cut fuels housing market revival. Mortgage applications jumped 11% the week ending September 20th, following a 14.2% rise the previous week. So the mortgage applications increased by 14.2%. And then on top of that, from that 14.2% increase, they increased another 11% the next week. Now, this article was written in the middle of last week, so it doesn't take into account the most recent week's data, but it's still fairly recent, right? Many of these home buyers were waiting for the Federal Reserve to act before deciding whether or not they should jump back into the housing market and apply for a mortgage or lock in that mortgage rate. However, if we take a look at what mortgage rates have done, those of you who have watched my videos recently know that this is East Rise Credit Union. It used to be NEFQ, New England Federal Credit Union. They just rebranded last week. So that's why the website looks a little bit different, but we can see the best rate that East Rise is offering is 5.875%, which is higher than the 5.75% mortgage rate for a 30-year fixed rate mortgage before the Federal Reserve cut their interest rates. So now we have more buyers coming into the housing market, more people applying for loans because the Federal Reserve cut their Fed funds rate, and we're seeing mortgage rates increase, not decrease, in line with that cut. So if you're ahead of what the Federal Reserve is going to do, if you watch the market, you pay attention to the news, pay attention to what's going on in the mortgage market, then you'll be better prepared than many people who are jumping in to get loans based on what the Federal Reserve does. Now, we take a look at the mortgage market here. This is what tracks the price of that 30-year fixed rate mortgage. The red candlesticks here mean that mortgage rates have gone up. The green candlesticks mean that mortgage rates have gone down. This is a 1-year chart. We take a look at a 3-month chart. We see in the days and weeks leading up to the Federal Reserve rate cut, pretty much mortgage rates were trending down, right? These green candlesticks, which I know is higher on the chart, relates to lower mortgage rates. And then we see after the Federal Reserve cut their rate recently here, we see this was Monday, September 16th, and then Monday, September 23rd, we see that mortgage rates actually increase slightly, right? They haven't gone crazy, but they have gone up slightly since the Federal Reserve cut their Fed funds rate. Now, why have mortgage rates gone up slightly? Well, the mortgage market is a free market, right? There's nobody who sets the mortgage rate out there. It's set by the investor who buys mortgage-backed securities, who gets their return, which is why it's so closely related to the 10-year Treasury, because many of the investors, the institutions who purchase mortgage-backed securities are also considering buying U.S. Treasuries, specifically the 10-year Treasury. So if the 10-year Treasury increases in yield, the interest rate on the 10-year Treasury goes up, then the interest rate on mortgage rates tend to follow that and increase as well. So we're seeing an increase in mortgage rates coincide with an increase in mortgage applications. There are more people applying for mortgages and taking out mortgages right now than we've seen in recent weeks. And because of that, there's more supply than we've seen recently, right? More home buyers are jumping into the housing market, are taking out mortgages, or refinancing their properties, which is diluting the mortgage-backed security market. In other words, there are more mortgage-backed securities available than there are investors who want to accept that 5.75% rate or whatever the rate may be, which is why we're seeing rates tick up, right? It's a supply and demand imbalance that causes the rates to increase. When there's more people taking out mortgages, the investors have a larger pool of mortgages to choose from. And because of that, they can demand a higher return on their investment, which is why right now the Federal Reserve isn't purchasing mortgage-backed securities. Back during 2021 and 2022, and even before the pandemic, the Federal Reserve was buying mortgage-backed securities to help stimulate the housing market. We're not seeing that now. The mortgage market is a completely free market at this time. I mean, besides what the Federal Reserve holds on their balance sheet, I would say the new mortgage market, what's being originated now, is a free market. These rates are dictated by the returns that the investors buying the mortgage-backed securities want to get. the more mortgages that are originated, the more mortgage-backed securities there are out there in the market, the more options these investors have to choose from, which will increase mortgage rates. So it's going to be interesting to see how this all plays out as rates begin to fall throughout this year and moving into 2025, because the Federal Reserve so far has not stepped in to purchase U.S. Treasuries or purchase mortgage-backed securities, which drives the rate down, right? The Federal Reserve is staying out of it, and the free market is the one that's choosing these interest rates, which I think overall is a good thing for the economy, but it might mean that rates aren't going to fall to that 4% range that we saw for almost 15 years leading up to 2022. So thank you so much for watching. I appreciate it. Leave me a comment. Let me know what you think. Do you agree with me? Do you disagree with me? I love reading your comments. Again, thanks for watching, and I'll see you in the next video.